Inflation data on the agenda today, this time at the producer level. May PPI is due in just over 2 hours' time. For more insights on inflation and the economy ahead of the Fed's policy meeting next week, we want to bring in Ian Shepherdson. He's chairman and editor-in-chief of Pantheon Macroeconomics. And Ian, the weaker than expected inflation numbers yesterday, once again. Look, what does this mean? That the tariffs are not going to be nearly as inflationary as people thought, or there's a longer delay? Because I mean, we keep waiting for these numbers that are not showing up.
We're all very impatient, aren't we? I mean, you know, it's only early April that the big announcement was made, and here we are getting the May numbers and getting excited because there's no tariff in the data. Yeah, we've got to take a deep breath and wait another couple of months. This is what we saw in 2018. It took about 3 months before we started to see the tariffs on consumer goods coming through at the CPI level. So I'm guessing it'll be something similar this time. But everybody's very on edge and very heightened attention given to all these numbers. But yeah, I think it's just a case of a bit of delay, not deferral, not indefinite. You know, we're going to see it eventually. You
know, the tariff news has been so, I don't know what you would call it, on again, off again, you know, higher levels, lower levels. How does that even play out? Like, how would you compare that to what we saw in 2018?
Oh, well, it's a much bigger scale, for sure. But it's not just the tariffs, the actual tariffs themselves. I mean, if we knew what the tariffs were and we could just say, OK, this is going to be it for the foreseeable future, I think the business sector could gradually adjust to it. It would be a one-time shock, but they'd kind of get through it. The problem that I think going forward is that we've got this cloud of uncertainty just hanging over everything because of the chopping and changing, because of the on-off, the up-down, the threats about what might come in the future, and then the walkbacks. This makes it very difficult to plan. If you're a business, you know, considering hiring people or considering a capital investment that's got a long payoff period that might involve some imports, might involve some export trade as well, how do you plan for this? You have to allow for a much kind of wider range of possibilities than you did in the past, and that makes it difficult.
We've been talking about that for months, obviously, and all the worries. This is what I don't get. Defies. And your take, winter is coming, it's going to be bad, it's going to be awful. That may very well be true. You probably would have thought we would have seen more than we've seen so far at this point.
Marginally.
Marginally?
Marginally, yeah.
On the inflation side. You also think it's going to hurt growth quite a bit. Yeah. I guess I certainly can see that. I don't know about the inflation. I guess we still have to wait. It's just weird that the numbers have been so good.
There's one super big question about all this, and that is, to what extent are U.S. retailers and wholesalers, distributors going to absorb it?
Or get their suppliers.
Or the suppliers overseas. I've got to say, we've not seen much sign of any of that yet, but it's just too early. It's just too early.
You see, this is crazy, too. You see this? How much we collected in tariffs in the last 2 months.
Billion last
38 billion in
last month.
I mean, I'm surprised to see it in the journal, but
so put that into your concerns about growth.
Yeah, well, it's a tax. It's a tax on the domestic consumer primarily and domestic businesses. But you know, retail margins went up massively during and after the pandemic, you know, by about a third roughly in gross terms. So that suggests to me there's scope for them to recompress, to take some of the hit, just to put them back to where they were before their margins shot up so much. The problem is that the market seems to think that margin expansion that we saw in 22, 23 is permanent. So it's going to come as a shock if what happens to tariffs is that, not that they destroy the inflation numbers, but that they massively push down retail margins.
Is there any way you're way too negative? And if the stock market is truly a barometer of the future and what's going to happen, it certainly would cause you to at least maybe question whether the real bearish case comes to pass.
Well, to be very clear, I've never thought the tariffs were big enough to cause a recession. I've always thought that they were big enough to slow growth down, probably for a year or so, and that they'd raise inflation for a year. I never thought that they would pass through into sustained inflation. I've never been a buyer of this, tariffs are going to cause stagflation story. I don't buy that. I don't think the labour market is strong enough to get people, you know, getting big wage gains that then spiral upwards.
None of that. Yeah.
So, but it's a one-time hit. You know, it's a tax increase. You can't raise revenue from
Everybody
tariffs.
wants to raise taxes.
Well, the president just did it.
I know.
And then he takes them back down again, puts them back up.
Half the country is dying for a tax increase.
Well, the market's response maybe is on this assumption that these high tariffs are not going to last. Exactly. That this is a negotiation. That you're going to get low lower numbers.
Sure. I think
working on that
right.
assumption and based on what both the president and Scott Bessent said yesterday, makes you think that. That July 8th or 9th is really not the deadline.
Then you're back to deregulation and certainty on taxes, on corporate tax. You're back to all the tailwinds.
Well, the full expensing in the bill, I'm very happy about that.
I do love it on your face.
It makes me very happy. Anything that makes the economy grow faster makes me happy. But tariffs don't. I mean, tariffs are a distortion and a tax on uncertainty. But yeah, the 145%, that was never going to last.
Will it hurt more than the retail stocks, you think, if it hurts their margins? I mean, you think about places that use aluminum, places that use steel, the taxes that have come through on that. Yeah, the users are the risk. All the focus is on the steel jobs that get protected, domestic producers that get to raise their prices behind the tariff wall. We need to be thinking a lot more about the very diffuse but very large number of businesses that are users of this stuff who now have to pay significantly more. And it's pretty clear to me that the cost in those businesses is bigger from a macro perspective than the gains to the businesses which are protected. So, I am very sympathetic to people who've, lost their jobs because of deindustrialization and unfair competition from China and other countries, and some of their trade behavior has been totally outrageous. I have no problem with seeking to address that. I just don't think that blunt force tariffs are the way to do it.